I, at that point, started having two tangents, which is realizing I need to do something about it, disparate information level, that one group has everything, everybody else has nothing. And the other thing is I needed to make the world safer because we're kind of screwed because of this over financialization, all the debt, that we could lose the system at any point. Nothing had gone away. The printing of money was just a way of wallpapering over the cracks earthquake had left behind. So I'm like, okay, what can I do? So the idea I had with a bunch of people was to try and set up the world's safest bank. And I tried to go and do that. It was slightly arrogant or stupid, probably, to try to do because it's not easy. And we got together quite an amazing group of people. Still, we tried in Singapore, we tried in Switzerland, we tried in the US, it was just hard to do. The system is not there for you to try and change. In that process, a friend of mine, one of my clients, tapped me on the shoulder and said, you should take a look at Bitcoin. This was 2012. And I'd been aware of Bitcoin and I took a good look at it. And he explained to me both the store of value proposition and the blockchain element, that anything could be trusted on the blockchain. I looked at this and I'm like, oh my God, this is the future that we need. Because the problem we've got is when a firm like Lehman Brothers goes bust, nobody knows who owns what. And somebody's going to get screwed in that equation. Just one of the very issues at the center of the system. Nobody knows who owns anything. So I started looking at that and I started writing articles and invested in it first time in 2013. 2014, I started Real Vision because I wanted to democratize the very best financial information. Nobody gets access for an hour to the world's most famous hedge fund managers, invested $100 million. Real Vision changed that equation entirely and said, listen, forget all this sound bites on CNBC of 3 minutes. It's worthless. We're going to give you an hour of the world's most successful investors, the best independent analysts and strategists, and then you have a level playing field. And that was a game changer. I mean, since Real Vision started in 2014, there's probably been 200 podcasts that's copied that model. So this is this movement. There's two things. There's the democratization of information, and then there's crypto. So crypto, as it starts building out as an ecosystem, you start to realize that, okay, this is now the fastest adoption any technology in all recorded human history.
Dude, you have to say that again. This is the idea that's gotten me obsessed with crypto, is how there's something broken. We're getting screwed and we don't understand where. Now this new thing has come along, but it's entering the system at a moment where it's sort of peak distrust, peak sort of throwing your hands up, you're giving up, you tried occupying Wall Street, it didn't work.
You've tried voting in Donald Trump, you've tried voting in Joe Biden, you've tried everything and nothing changes.
So hit people with that quote again, because this is something that, and I'll give my background for people that are hearing me talk about this stuff for the first time in a minute. But that quote about this being the fastest adopted technology, I think is important.
The internet from 1990 to 2000 grew at 63% a year. That was the fastest adoption of any technology in all recorded history. Prior to that, mobile phones was the other one. But what happens is internet technology and the mobile phone technology allows for these networks to be built. And once that network's in place, it's faster to build the next network. So in India, for example, they've just basically given out free data to every mobile phone in India. So guess what? Data usage is the highest in the world. And so their internet scaling becomes faster. So the internet was huge, as we all know, and it remains huge. So it's 63% a year. It then flattened out over time as more and more people got adopted. 1997, it was growing at 63% a year, and there was 140 million users of the internet. In 2021, there are 140 million crypto users, and it's growing at 113% a year.
Jesus.
Double the speed. Now, this is where humans struggle. Linear numbers and exponential numbers. Because it's exponential, it means that growing at 113% a year, we're going to go from 140 million people to 1 billion people by 2024. So when you go back and how you introduced all of this, so if you know that something is being adopted at this speed and it's a network of money at its core, and you can buy an infinitesimal fraction of it, so everybody can buy 10% of their net worth, everybody who takes this opportunity will probably have the biggest opportunity in history to make money. Ethereum's kind of like owning a part of the internet. Everybody has to use Ethereum, basically, that uses this crypto rails, unless you're just in the Bitcoin world. But everything that we've talked about, and everybody will have, even if you're not very familiar with the space, will have heard the term DeFi or NFTs or tokens. And basically, most of that is still being built on Ethereum. And as you said, the network. So what is this Metcalfe's law that you and I have referred to? Metcalfe's law is, it really started to become understood in the 80s, and then much more so as mobile phone networks started, these giant connected networks, right? Because digital technology allowed networks to connect. Before it's humans, we couldn't connect with each other in the same way. Networks connect with mobile phones, and suddenly they explode in value. All these phone companies, huge companies. And if you added them all up around the world, they'd be worth tens of trillions probably. We just don't even think of it in those terms because they're fragmented networks. Then the internet comes along, this free network, and everybody builds on top of it and they create network effects. Like the most classic example is Facebook. Facebook connects us with friends and family. In exchange, they get your data, they sell you adverts. So you've got a bunch of people using it, a bunch of businesses now building on it, and this advertising monetization structure. Shareholders get rich, unfortunately meet somebody from university that we don't want to talk to that we met 20 years ago and we're now connected with again. It's that. But the network that Ethereum and Bitcoin does is different. You're the owner of the network and the user. So as a user, like you said, with the NFT, you're actually owning a share of the network itself. So everybody uses it, owns a part of it. Therefore, if the network's going to get used a lot, you're all going to get rich and the value of the network's going to go up massively. And the more people build interconnections, so Metcalfe's law is not only just the number of nodes, i.e. the number of users, but how much they connect with each other. Well, you're seeing it because there's NFTs and there's DeFi and there's all of these applications or the store of money aspect. These things all together, and then there's the linking of all of these, like Chainlink or some of these other protocols, Polkadot. They're linking all this ecosystems together. So I can send you $1 instantaneously, and we have no idea whether it went on Bitcoin rails, XRP rails, Ethereum rails. And guess what? We don't care. I promised you $1. You want to get the dollar instantaneously. That's interoperability. That's all coming. So this is what Ethereum is about. It's the magnitude of this network where everybody's developing everything on top of it. And it's scarce supply. It's seeing an even faster adoption rate than Bitcoin now, for the reasons that seem pretty clear, because it has more use cases than currently the Bitcoin blockchain does. Doesn't mean Bitcoin blockchain can't in due course, but right now there's a lot more use cases in Ethereum. It's super exciting.
Do you think that Bitcoin would need to do something like that in order to retain its value proposition?
No, I think its value proposition stands above all things. It is pristine, it's pure, it is what it is. The way it's so impossible to change any of the attributes of Bitcoin makes it a bit clunky. And that clunkiness is its beauty. It is so secure. It's the most secure of all protocols. Let it be what it wants to be. Now, people are building things like the Lightning layer, which allows you to do lots of fast payments over the top. Maybe that scales. Maybe it doesn't. Doesn't really matter. That store of value for every person to think of, like it's owning a piece of Manhattan real estate at low prices, that's never going away. Not in the conceivable future, because humans have now said it has value and it's being adopted very fast. No, Ethereum's a very different thing. It doesn't compete. That's how I like to think about it. And unfortunately, when you go online, people will tell you, well, it's competing and it's not as good. You have to ignore all of that and look at the whole space overall and just be honest, saying, we don't know where this is going to be in 10 years' time. And like you say, so therefore I can own 3 of these things. Probability is I'm going to capture a large part of this and maybe I'll adapt in due course. And so,
one thing, sorry, go ahead.
Yeah. So it's don't overforce the narrative. Just be broad, be open, always be learning, as you rightly said, because we don't know. This is all new and it's happening at lightning speed.
We hope that you have enjoyed this insightful video report. Please give it a like and do share it with your friends. To explore further on profitable Bitcoin analysis, please check out our live Bitcoin seminars and webinar events. The link access to the event platforms are listed in the description of this video below.